Hi there, happy Friday. Pam Wandry here with Columbine Mortgage, and this is your Weekend Watch. This week we saw quite a bit of turbulence in the markets, mainly due around concerns about those potential tariffs that were for the European Union, as well as Japan possibly needing to take on some more debt. Both of those concerns were alleviated by the next day, but it did have an impact on the rates. And then we had our personal consumption expenditure report come out, and that came in showing that inflation is holding steady below that 3%. And so overall, our benchmark rate actually ended up just where it started at the beginning of the week at 5.99%. Here in the Denver metro area, we had another solid active week. We had over 1,000 homes come onto the market, increased inventory out there again. We had 11% of new homes going under contract this week. We are also seeing that the number of homes that have only been on the market for 30 days or less is also increasing. That is at 28% now. So overall, that is helping to move our median days on market back down, and so we're now sitting at 49 days on the market. Here at Columbine, we had a solid active week of offers going out. 86% of them were accepted. We had both ends of the spectrum where some homes they received either price and or seller concessions, or the other end of the spectrum where there is more competition and they had to bid over list to be able to get or win the contract. So seeing all things in the market right now. So it really just highlights that you need to stay in touch with your agent, focus and rely on their expertise to really tailor the offer that's going to be the most effective for the specific home that you are looking at. You may often wonder, like, why do rates move so much? What's going on? And of course, there's the typical market rates that impact the rates. So like, or reports that impact the rates, like your inflation reports and then labor and data things that come out. Those do have an impact on the rates, but also internationally, global information and news impacts the rates. And so it really can influence how investors feel about risk and stability. And so those headlines can really drive how investors move their money between the stocks and the bonds market. And so when they move into the bonds market, that's great. But when they move out, that means the mortgage-backed securities, the rates go up. So really sensitive to all those news headlines globally. So as you can see, that also influences why rates move up and down all day long. And so it's really hard to time the market and predict exactly where it's going to go. So if you have any questions or headed out this weekend, absolutely hit me up. I'm here to help however I can. If you have questions, give me a call. All right, take care, and I'll see you next week. Bye.